Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Okay, welcome everyone to Zacks Investment Research Top Stock Picks for January 26th. My name is Andrew Rocco. I'm a stock strategist here at Zacks Investment Research. I also do cover the Tech Innovators Portfolio Service here at Zacks. And today I will be covering my top stock pick. And that top stock pick is Nvidia, ticker symbol NVDA. I'm sure most of you know the stock, but we're going to talk about why we remain bullish on it. So Nvidia earns a best possible Zacks rank number 1, which is a strong buy. And really, it's the world's most important artificial intelligence company. And before the recent artificial intelligence revolution sort of took hold with the launch of OpenAI's ChatGPT, Nvidia was a pioneer in PC graphics for video games. But in the early 2000s, Nvidia's GeForce series graphic cards unexpectedly unlocked their GPUs, which are graphic processing units for scientific computing. And that really set the stage for the AI revolution and led to the dominant Nvidia that we know today. So they've had several iterations under its belt since then, and it's become almost essential pick and shovel to the AI revolution. Its powerful GPUs are light years ahead of the competition and are the foundation of the tech stack needed to train AI and large language models such as Gemini and ChatGPT. So currently we're going through the largest infrastructure build out in history thanks to AI. And what we've learned from Jensen Huang, which is NVIDIA's iconic CEO, where he delivered comments at the recent World Economic Forum, which is WEF in Davos, Switzerland, Wang outright dismissed bubble fears, citing rising spot prices. So even for older GPUs, clients are willing to pay up for those GPUs, meaning there's extreme difficulty in renting them. And then beyond that, the hyperscalers, which include companies like Amazon, Alphabet, Microsoft, they've already spent hundreds of billions of dollars on these AI investments. So Wang predicts that trillions of dollars are in the pipeline, ready to support the latest and most powerful AI models. So really from this slide, what you need to understand is we're still early in this massive AI build out. And the Wall Street analysts, which are tracked by Zacks Investment Research, they tend to agree. So Wall Street analysts appear to be in lockstep with Jensen's predictions. Zacks consensus analyst estimates suggest that Nvidia revenue and EPS will each soar by more than 50% in 2026 and will continue into 2027. So it is just unheard of for a company of Nvidia's size, around $4 trillion, to be growing at 50%. So it really has, the stock has the rare combination of liquidity and high growth that institutional investors are looking for. But despite that massive growth, Nvidia shares have been consolidating. They peaked, for now at least, in October and have sort of moved sideways. And the company's fundamentals during that time have only become stronger. So the result really is Nvidia's valuation metrics, such as its price to sales ratio, have retreated dramatically, making the stock attractive to a wider swath of Wall Street institutions, including those that focus on valuation. So Nvidia, which had a price to sales ratio of around 200 times sales in 2023, that price to sales has dropped all the way down to a very reasonable 24x. And, based on the growth, that's very, very bullish. And I would even look at Nvidia as a GARP play, which is a growth at a reasonable price play. And then finally, most investors have kind of focused on the large language models such as ChatGPT and Gemini. But really, what's exciting about Nvidia's business is there's going to be a breakout in new verticals in 2026, at least in my view. We're going to see these humanoid robots start to hit the market, such as Tesla's Optimus, which can do chores for you. It can perform tasks for Tesla on the factory line. We're seeing these delivery robots that are dropping off DoorDash orders, and we're seeing AI move into the application side of things. So all of that is going to require more and more training, which will in turn equate to more and more Nvidia chips. So even though Nvidia's stock has kind of consolidated over the last few months, demand and growth is only speeding up here. In my view, we're still very, very early, despite the blistering growth that the company has already enjoyed. So we remain bullish Nvidia over the next 6 to 12 months. Again, my name's Andrew Rocco. I'm going to pass you guys over to Brian for his top stock pick of the week. Thank you.
Thanks, Andrew. And hey, everyone, Brian Hayes here with Zacks Investment Research. I've got another exciting pick for you, so let's jump right into the action. My top pick designs, manufactures, and sells equipment, apparel, and other related accessories both here in the US and internationally. The company I'm referring to is Callaway Golf Company, ticker symbol CALY. So back in 2006, Callaway recognized Topgolf's potential early and invested in the company that was transforming driving ranges into competitive gameplay destinations with a sports bar type atmosphere. Many of you watching this have probably been to a Topgolf location at least once. Callaway eventually controlled as much as 14% of the business before the two entities completed a full merger back in October 2020. The Topgolf brand boasts nearly 100 locations across the US, along with 4 international venues. But just recently, Callaway sold a majority stake of 60% in its Topgolf and Toptracer businesses to private equity funds in a deal valued at about 1.1 billion. Callaway received about 800 million in cash proceeds after adjustments in transaction expenses, and as part of the deal, the company repaid 1 billion in outstanding debt and also authorized the repurchase of up to 200 million in common stock. So the deal reduced leverage for Callaway while still allowing potential future value creation through its retained stake. Callaway plans to put part of the proceeds back into its equipment and apparel businesses. Callaway has been the number one equipment club sales company in recent years in the US and is the number 2 ball brand behind Titleist. Earlier this month, Callaway introduced its Quantum set of drivers, fairway woods, and hybrids engineered with groundbreaking technologies. Its Odyssey putters and Travis Matthew apparel are also under the Callaway brand. This is a stock that struggled in recent years, but just underwent a structural transformation. And not only does is the stock responding well, but its future looks bright here. Callaway shares went from lows of around $5 per share last year to over $15 per share here in January 2026. So it's quite rare to have a penny stock begin to reach these levels and signals that higher prices are likely ahead. Only stocks that are in extremely powerful uptrends are able to make this type of price move, and these leaders are the types of stocks that we want to focus on. So this transformation is enabling Callaway to reaffirm its position as a leading pure play golf business. The company sells its products through golf retailers, sporting goods retailers, department stores, as well as its websites and online. So this is a stock that is not only highly ranked by our Zacks rank system, but it's also outperforming the general market. That's a bit about Callaway's background and services offering. Let's shift gears a bit and look at some fundamentals for this company. Callaway is part of the Zacks Leisure and Recreation Products Industry Group, which currently ranks in the top 36% out of approximately 250 Zacks ranked industries. And because it is ranked in the top half of all Zacks ranked industries, we expect this group to outperform the market over the next 3 to 6 months, just as it has over the past few months. Historical research studies suggest that approximately half of a stock's future price appreciation is due to its industry grouping. In fact, the top 50% of Zacks ranked industries outperforms the bottom 50% by a factor of more than 2 to 1. So, by focusing on leading stocks within the top 50% of Zacks ranked industries, we can dramatically improve our stock picking success. And also note the characteristics for this industry group below. We can see that while valuation measures are somewhat mixed here, the industry is expected to experience above average projected earnings growth. So investors are rightfully willing to pay a premium for the enhanced growth. And moving along to our snapshot page here, we can see that Callaway is a Zacks ranked #1 strong buy stock. And what stands out is Callaway's consistent ability to deliver positive earnings surprises. The company has exceeded the earnings mark in each of the last 11 quarters. Callaway delivered a trailing 4-quarter average earnings surprise of more than 290%, reflecting strong execution. And this track record aligns perfectly with the power of the Zacks rank system, which prioritizes stocks showing upward earnings estimate revisions. And Callaway has been the beneficiary of improving earnings estimate revisions as of late. Looking into the numbers for this year, analysts have raised their 2026 EPS estimates by a whopping 300% in the past 60 days. The Zacks consensus estimate now stands at 24 cents per share. And let's check how that compares. So that 24 cents per share reflects nearly 230% growth relative to the prior year. These are the types of trends we want to look for when narrowing down our list of potential stocks. And the stock price has reflected the fundamental growth. As we can see, since June of last year, Callaway's stock is up more than 150%. And notice the steady trend of higher highs, leading to sustained outperformance and rising moving averages. Between the strong fundamentals and appealing technicals, it's clear that this stock is a leader in the current market environment. So Callaway Golf Company, ticker symbol CALY, is my top pick of the week. Shares have really come on strong as a result of the company's recent transformation. I see more upside ahead for this stock. From Andrew and I and all of us here at Zacks, thank you for watching. Be sure to tune in next week for more of our top stock picks.